It's Tuesday morning, and it is time for for professional insights. Notice how I stumbled over that, Mike. Good morning. How are you?
Good morning, Mike. How are you?
I think I may learn how to speak yet this morning.
Improv classes are helping.
The improv classes are doing wonders. Yes, they are. Yeah, this is where we dispense information every Tuesday morning that we know professionals will be able to make use of, and other people as well. And we're the two guys without any hair, and we got the hipster beards, and then we got another guy here who has none of that. Okay, who just agreed to join us impromptu. It's my partner Rick Watson is here, and we want to talk today about stuff that's been on everybody's minds for the last couple of days, which is this bank failure stuff. SVB, now Signature Bank in New York, all the stuff that's going on there. What are the implications? Should you be worried? Is there going to be another financial crisis? All that stuff. Okay. So, Rick, let's begin at the beginning. Okay. How serious is this? And is this kind of overblown?
It's serious, but I think that they're going to handle it in such a way that it won't be too bad. I was thinking about it, and it almost sounds like a venereal disease, doesn't it?
Well, we've descended very low already. Thank you.
It does. I mean, I think people say, "Oh, you have SVB." Okay. You're like, "Oh man,
all right."
Oh man,
so the people who were watching just logged off. Just want to let you know they're gone.
No, I think it's serious. I think that if left unchecked, it would be really, really ugly. I just think that I don't think they're going to leave it unchecked. I think that they're being very aggressive about dealing with the contagion aspect of it. Again, back to the same disease thing. So I think they're being really serious about it. I think it's going to get resolved here fairly quickly. Within, like, it might be ugly for a week or two, and then I think it'll be past memory.
Rick, there was a news article this morning that I found interesting. This situation isn't an insolvency problem. This was a liquidation problem or a liquidity problem.
Correct.
Why is that important to somebody that doesn't understand the bank going bankrupt and the bank just having a liquidity problem?
Right. So, I mean, banks have money coming in the front end and money coming out the back end. And the problem is if too much, and they're supposed to balance those two. And if too much money starts coming out the back end, so they have assets, a Signature that got grabbed the next day. They have significantly more assets than they have liabilities. The problem is, and they were still able to make those two, but the feds were like, yeah, but what's going to happen is with people get nervous and a demand, the outflow is faster than the inflow. And all banks, they don't just sit around with bags of cash laying around. The money's actually in other things, in loans and things like that, but they have to be able to liquidate those in time to get to the other investors. So,
So talk about the difference between a commercial bank and a retail bank. There's a big difference between Silicon Valley Bank, which, by the way, who better than Silicon Valley to blow out a bank in 2 days? I mean, these are the people that can do stuff quick. Hey, yeah. They're good at bank failure. But really, though, in all seriousness, there's a big difference between a commercial bank and a retail bank. It's not like Silicon Valley Bank resembled Wells Fargo or Chase, right?
Yeah. If you have consistent depositors, small depositors, they're kind of predictable in the way they take money. I mean, it's not, but there's so many of them, that so many of those little transactions, that it sort of smooths its way out and makes it way easier for the bank to determine how much cash to leave around sitting in cash. But Silicon Valley Bank is dealing with large blocks of money. Like, if you did a venture capital raise, you had $50 million laying, that you got in, and then it's going to get dispensed out for things like income for payroll. Well, if that institution decides to move his account, it's $50 million coming out. And if you get, 50 of those happening at one time, all of a sudden the amount of cash being needed is just massive. And I think it's interesting. Signature, same thing. I think it's interesting because they're going to have to step back. Those banks do something unique that Wells Fargo doesn't do.
Yeah.
And it'll be interesting of how we handle this going forward, because, you can't just say, well, they all have to act like Wells Fargo. Well, that's not going to work, because it doesn't work for the way that these guys need, the people who use those services need to have money used. So there's a reason they exist, and it'll be interesting how they're going to handle that balancing act going forward.
Yeah, Rick, because is it the major banks, Chase, Bank of America, Wells Fargo, things, are they going to have to change how they do business to accommodate these startups, or is Silicon Valley Bank or the like going to have to change how they take on those deposits?
Or maybe there's going to be some way of, I'm not sure. That's an interesting question. I'll tell you this: we have an investment fund that uses Signature for one, and by the way, we're fine with it. It's good. We also were using U.S. Bank, and U.S. Bank was awful by comparison of working with Signature. Signature was purpose-built to send out dividend payments to clients and things like that. And U.S. Bank, it's like going into the branch and trying to get money moved. They weren't built for it. So I don't know how they're going to, and it may be that what ends up happening is folks like us end up using two institutions, sort of a backup institution and a front end institution that doesn't have as much money that they're holding on to. That may be how it ends up working out.
So I guess my question is, I was reading an article where Charles Schwab, reassured investors that they are well capitalized, have plenty of liquidity. I'm sorry, this is Charles Schwab. There's a big difference between Schwab and Signature and or Silicon Valley Bank. And that's why I was asking at the beginning, it seems like, this is important, but to a certain extent, things get way overhyped, and that induces unnecessary worry, doesn't it?
Well, absolutely. I mean, the concerns yesterday, we were fairly busy with clients calling with questions, right? I've got this, or, worried about that. Most of the time they just needed some reassurance. But the gut of their questions, they weren't like really well-considered questions. They were, should I be running for the fences right now? Are we adjusting for this? Do I have any money left? Kind of thing.
Well, Rick, one of the questions I got is over the weekend, matter of fact, was the market's going to crash. And we saw yesterday that it didn't crash. So, I know it's kind of hypothetical, but why didn't the market crash?
Well, that's pretty straightforward, because the Feds became very aggressive, right? Had they let those things, had their attitude been, well, investors need to lose money because that's how the system cleans itself up, the market would have crashed, because what would have happened is the contagion would have pushed its way through, not just to the US, but internationally. And I think there are a couple of shoes that are getting ready to drop on additional banks that may need additional capitalization. One in England, I think it's called L something X something. There's one in England, and there were 3 or 4 regional banks that were sort of participating on the sidelines in this space. So
aren't these niche banks though, Rick? Silicon Valley Bank is a very niche bank. Signature Bank of New York, they were heavily invested into cryptocurrency. The Silver Fork Bank was cryptocurrency. So is this a systemic thing, or is it a niche bank that is having to rebalance because of the market?
Yeah, so I want to be careful of that, because there's this whole idea they were heavily invested in crypto. And I don't know that. You might know more about this than I do, Mike. I think that I don't know that the bank said, hey, I'm going to put a third of my reserves in crypto. I don't think that's what was happening. I think that they might have been dealing with crypto funds, and those crypto funds because again, they deal with institutions. Those crypto funds have weird demands for money, just like other fund groups have weird demands for money. And so I just want to clarify that. And just because it makes it sound like they were invested in crypto, and I don't think they were like, let's just take huge risks. I don't think that's what they were doing.
Yeah. Well, I think your earlier explanation, probably holds true, which is there is a big difference between institutional investors and or bank participants and retail investors, everyday depositors, just going on about their business and doing normal everyday banking. And one bank was involved heavily in one type, and most banks aren't.
Yeah, no, I agree with you. I think the other thing is that venture capital, that is the people who go out and raise money to start companies, that area has been receding quite a bit lately.
Mhm.
It's sort of normal, right? There are times when financing activity like that is really active, and there's times when they're like, yeah, I mean, if you're starting to go into recession, you're thinking maybe we're just not going to go raise a whole bunch of money. So that front end of this bank that area was really falling apart. Not falling apart, it just was reducing, right? The amount of volume. So your front end money was really coming down, and your back end money was still coming out the same way. People were still using this money from the bank to pay payroll, for example. And that's why maintaining this bank and making sure these things continue. I mean, can you imagine if you're a fund and all of a sudden you can't send out a dividend payment because the bank freezes up? What that does to your reputation, and I think that was the risk of spread. So that's how it would have affected small investors, right? All of a sudden their funds couldn't do what they were supposed to, or they're not getting paid, or there was like issues in that, right?
So the article you sent out yesterday, Rick, I had an interesting comment about Peter Thiel. And the article didn't blame him, right? But he has a lot of influence.
Yeah.
And so in that scenario, you have a lot of money coming through, investors can't pay. Could someone like that really influence that situation?
Well, yeah, I think so. I think, just to reiterate the part of the article, basically what it was saying is that Peter Thiel, he's a venture capitalist who, if he makes a decision, the other venture capitalists look around and go, oh, shoot, maybe I should be doing that too. Mm-hmm. And so he was very public about saying, hey, I don't think we should be using SVB. Okay. And so when he says that and he goes, yeah, I'm going to pull my $100 million out, do you think the other guy standing around with $100 million is like, well, maybe I should move it too?
You start to question your sanity.
Yeah. And again, it's not Peter Thiel's $100 million. It's Peter Thiel's investors. It's not like one rich guy is talking to another rich guy. They are representing their investors. And when they start to pull money, that's what happened. I mean, that's what they were blaming him, at least, for being very public about saying, I think something's not right here, and I'm going to pull it out.
And again, you're illustrating institutional behavior versus retail behavior in that example. And I want to go back to something I said earlier. Schwab having to explain to its investors, I think, is a little bit over the top. And I was asked yesterday, I made a joke about this yesterday, if Schwab goes down, your problem is not money, it's food, and buy canned goods and get a bunk. We're in a different state of affairs if that happens.
Which is why the government's never going to let that happen, right?
Yeah.
But the same thing when B of A started to go down in the liquidity crisis, and then it started this, what am I trying to say? One after another starts popping. They're like, yep, nope, we can't let that happen. And it's the same thing. They would never let that happen. It is really true. Too big to fail.
Some institution, which is why I guess my question would be, if somebody is saying to you, should I be worried beyond just the event itself? What's your answer?
Yeah, no, I think this is going to go away. Give it 2 weeks. And I think it's largely going to resolve itself. I mean, let's hope that's the case, because if it started as a small, it's sort of like World War I, when it started as a small, little.
You're comparing this to World War I. No,
well, what I'm saying is, it started out as an assassination, a small, one little thing that happened in one little country, and all of a sudden it sort of spread, and it's that same contagion effect. I think that. I don't expect that to be the case, but if it, you just never know what happens until it happens. But
okay, Mike, you get the last question. Get the last word.
No, Rick. Next 2 weeks, we'll see what happens. For somebody watching, whatever level they are in investment, what would you tell them? And I know we're not your advisor who's watching, but if there was something that they could do to kind of ease that anxiety, what could that be?
Well, they might still have the anxiety.
Well,
Stop reading the news. I mean, that's the starting point. But I think that investing is about patience and not being super reactive, being smart about the decisions that you're making. And so I would let things just percolate and see how they go. And I'll tell you, for our own standpoint, when we looked at Signature yesterday, the feds took them over yesterday. If I wanted to, I could have wired all the money out of Signature yesterday. And I decided not to. I go, it's not that much money. I think we had like $180,000 there. And I was like, I'm just going to reposition a few things, but I'm not in a panic set. And I think that because the feds had made it really clear, they're going to cover everything. The bank's basically operating in all the same way. So I would just be patient and let things work their way out. Because
Did Rick just go? Are we having technical difficulties? Rick, are you there?
name individual.
He's back.
Oh, did I drop out? I was just going to say, how many people could name the last couple of bank failures? Because there's some big ones that I don't think people would even remember.
Home Savings was the last really big one in 2008.
Well, there was so they were looking at one of the huge ones, Washington Mutual.
That Home Savings, Washington Mutual. Sorry. Yeah, you're right.
Yeah. So my point is, and we're the professionals, right? I think that the stuff will go out of memory fairly quickly.
Okay. All right. Well, thank you very much for all of that. We hope this reassured some people. I know there are a lot of concerns out there. I think most of them overblown, frankly. But Mike, you got anything to say in closing?
Absolutely. Rick, thank you for jumping on. I apologize for not reaching out sooner. But if you found this video helpful, please hit the subscribe, share it with your friends and family. We are here every Tuesday morning with professional insights. Make sure you click the notification bell so you get all the notifications. If you have any questions or you'd like us to cover a topic, please leave a comment below and we'd be happy to get to it. So with that, Rick, thank you. Mike, thank you. And we will see you next Tuesday.
All right.